Welcome to the LA Real Estate Podcast, your podcast on buying and selling real estate in Los Angeles. Today, we're going to be talking about the market shift. You've heard it. You've read about it. It's true. It's happening. So we're going to talk about it. Of course, I've got my buddy here, Justin.webb with the Skelton Group.
Hi, Sara.
Hi, Justin. He's in studio, so we're going to talk a little. And then, of course, we have our good friend, Natalie Salins from Movement Mortgage joining us to talk all about mortgages. And we also have my good buddy, Kenya Reeves-Costa. So excited to have her on from Compass. Oh my gosh, things are crazy right now. So, okay, this is a really funny story. I was with my kids in Target, in a random Target, and I ran into our producer, CP, 9 o'clock at night the other night.
All right, now you get to see him again.
Yeah, he just happened to be in Target. And I heard this, Sara Skelton, and I turned around and there was CP. It was amazing. Yeah, so that was pretty cool. So how are you? How's baby?
Baby is great. I mean, it was tough there for a while. I'm not going to lie.
Oh, really? Having a newborn baby is tough, Justin?
Well, some people just breeze through it. Our baby didn't sleep. Our baby just cried for the first 3 months.
Yeah.
So I will say to you, all you new parents out there, and then it can get better. It did get better. She started sleeping through the night, and now she's just an absolute joy. And
that was. I had a colicky baby, and that was hard.
Yeah,
my little love, Tommy Danger. Yeah. Well, welcome back. It's exciting to have you. So, talk to me a little bit about what's happening out there.
Well, we're feeling a shift. Everybody's talking about it. People have been writing about it for months, and it has failed to happen. And then then all of a sudden it did, right?
Right.
So I think it's good. I think that the market for the last couple of years has been unhealthily unbalanced towards the seller. It's created really stressful environment for buyers, even trying to take advantage of those low rates, and a lot of stress for agents. And I think it's a positive thing, but there's some growing pains.
Yeah.
And so that's what's going on right now.
I mean, I think it's great that we can finally get some buyers into houses. You know, our job is to match make, right? We want buyers to get houses. So this is a good market if you're thinking about buying. And yes, there is a shift. So prices could go down. However, rates we think are going to keep going up. So that kind of balances things out. Might be a good time to really start looking and then sort of, work with your agent, or if you're on our team, work with us to sort of see when a good property is a good buy. That's the most important thing, getting you into your home. Anyways, we've got some great guests today. We're going to talk all about real estate, as always. So here we go. Natalie Salins, back on the podcast. I'm so happy you're here. Yay!
I'm so happy to be here. It's been such a long time, right?
I know. It really, really has. Everybody has been so busy. I feel like I've just finally gotten a breath, like to be able to record some podcasts and touch base with all of my peeps. So Natalie, one thing that we haven't talked about in a really long time, and I want to talk about rates and the market shift and everything in a little bit, but I'd love to go over again, start to finish, what happens when someone gets their contract accepted as far as the loan goes. So very first step, someone gets an offer accepted. What happens next? Tell me about like the package they receive in the mail and the next steps that happen during escrow.
Perfect. Yes. So somebody gets their offer accepted and I need the contract and escrow information right away. Like that's the most important thing because I can't do much without those terms. I can't order an appraisal without the contract. I need escrow information because I need their fees and title fees. So that's the most important thing is that we get, number one, of course, informed because sometimes people get into escrow and don't tell me.
Right. And that's our job as a real estate agent. The second we open escrow, we behind the scenes do an email introduction with the lender and escrow and with sending the lender the contract and letting you know dates and all that sort of thing. So then once that happens, you get the information. What do you do next as the lender?
So we will send a congrats email to the borrower that has, for me anyway, a list of do's and don'ts of things to not do and things to specifically do during escrow. And then my loan managers start working on the file. So we send a needs list to the borrower with any items that we're going to need to go in for underwriting. Or if we already have underwriting approval, like our upfront underwriting approval, then we'll send a list of any conditions on the file that came in after approval.
And so those could be what, like a recent pay stub, a letter of employment. What are the types of things generally that come up?
Updated proof of funds. So maybe recent bank statements, recent pay stubs. If they have a new credit report, if it's been a while, then I'll have like a new what's called consumer explanation letter if they have any inquiries or anything has happened on the credit. We also will ask for proof of the earnest money deposit if they've already deposited it, proof of insurance if they know who they want to use, different things like that. Normally, I'm getting that needs list out really quick within the first day. So they don't have a lot of those items yet, but we'll still send them the list so they are aware of what's going to be needed in the next, week or so. We will then also send upfront disclosures. Those are a very important part of the process in the first 3 days because we need those signed in order to order the appraisal. So we send those out normally within the first day. I try to get them signed immediately because we need to then order the appraisal, sometimes on rush, sometimes on standard.
What type of disclosures are there?
Well, a lot. It's like a 60-page situation. It's kind of a lot of regulation. It's a lot of government docs, Social Security docs, IRS 4506.
So basically a lot of stuff that people probably will skim over and not really read, but it probably is important for people to actually slow down and read them. However, do not put off signing them and sending them back.
Correct. Signing the upfront disclosures doesn't lock or bind you into anything. So I normally suggest signing them upfront swiftly, reviewing them after so I can get the appraisal ordered. But then, of course, reviewing them. They're going to get a set like this throughout escrow as well as numbers shift and change. As you know, that can happen. So they get updated disclosures, updated when we lock the loan, and updated lock disclosure.
And are those emailed generally or are those sent in the mail?
Almost always emailed.
That's very nice.
Oh, yeah. And always available through electronic signature.
That's
on your phone. Yeah, it's great.
Yeah,
people most
terrific.
of the time do it on their phone. Yeah, it's great.
And then can you explain the difference between that and the opening package?
So the opening package comes from escrow, right?
Right. So some people get a little confused about at the beginning of escrow. I feel like there's so many things flying at buyers.
It's the first 3 days are the worst.
So they're going to get an opening package from escrow, which will have some information, ask how they want to hold title, ask called a statement of information where they have to fill out their past mailing addresses and all that sort of thing, work history. And then they'll also receive what you just explained, which is a package of disclosures from the lender. Those are two separate things.
Right.
Another question I get a lot when people first open escrow is they get a package with a bunch of numbers and figures from their lender, and that freaks everybody out. So can you please explain that part?
Totally. So it freaks everybody out because basically, regulations have told us that whatever we send in the beginning, we cannot be a penny over at the end. So what does that mean for us? It means that we inflate the numbers in the beginning. We actually put like some seller fees in there. Like we'll put owner's policy and transfer tax fees, which are really very much seller fees, unless you guys have some sort of agreement before signing the contract that the buyer is going to pay them, but they're really seller fees. We include it in the beginning because we have to, because just in case, like, let's say it's happened in the past. Let's say at the end of escrow, the seller's like, what? Transfer taxes? I don't want to pay those. And the buyer says, well, I'll just pay them. Fine, let's close this. Well, if I didn't disclose it in the beginning, I can't charge the borrower.
Interesting.
So we put a slew of things in the beginning that freak the borrowers out. Of course, they have every right to feel overwhelmed and insecure about it all, of course. And then we say, just so you know, again, signing doesn't lock or bind you into anything. This is truly your worst case scenario. And we're letting you freak out now so that you don't freak out at the end. It's much more important that you acknowledge this, see it now, and then at the end, feel relieved by the fact that it's less.
Yeah, that's always a nice surprise. Better than the opposite.
Better than the opposite.
So you were talking about appraisals. So now you have someone, the buyer has received their opening package, the buyer's received the disclosures, the appraisal gets ordered. Again, I know we went over this a long time ago, but I think we have a whole new batch of people, and I'd love for you to explain what happens during the appraisal process.
So we order the appraisal lately because there aren't refinances anymore. Appraisers are pretty darn available.
Oh, that's nice, because they were not in the last couple of years.
Not at all. The appraisal process was, kind of a thorn in everyone's side, but it's because appraisers were just absolutely slammed with refinances and everything else. So it was very difficult for them. Now that has virtually gone away, they have much more time. I'm getting my appraisal orders accepted within an hour, inspections scheduled same day, reports back in a couple days. So very, very fast. It's been such a relief actually in that realm.
Oh, that's great.
Yeah. So we order it. The appraiser, of course, contacts the listing agent because they have the contact, of course, and the keys, the availability to get into the house. And they go in, they inspect, they do measurements, and then they go back to their house and they pull comps and they write the report based on what they saw, what they measured, and the comps in the area.
And then they give a value, which is the appraisal. So we're seeing we have in the last couple of years been seeing a lot of down payments. So high down payments. So if an appraisal came in a little bit low, it sort of was a moot point because someone was putting such a high down and it didn't really affect their loan. I didn't have many things. First of all, I didn't have many things under appraise. And I also just didn't have many appraisal issues. Now with the higher rates, are you finding the appraisers are being a little bit more conservative with values, or are most things still coming in at a value? Because, if a house has 15, 20 offers, sometimes the bidding can go up to a point that really is over the comps.
I think it's a little bit of both right now. As you know, it's a real mix. Before it was like 90% of people offering way higher. Now it's only I'd say 40% of people offering higher. I'd say 40% of people offering list and 20% offering lower.
Interesting. Wow.
Yeah. I mean, I have people offering lower and getting accepted, which is crazy, but it's because the market is softening because of inflation and because of higher rates. It's what the Fed wants and they're getting it. And so sometimes I'm getting an appraisal in that's a little low and sometimes a little high. Two of my appraisals in the past, let's say 10 days, have come in overvalue.
Wow. Well, that's great for buyers.
Now it's time for another buyer's tip. So when you're looking at homes, a good idea is to look at the doors. And what I do is I actually close them and look if I can see gaps in light in the frame and the jamb. It could be evidence of settling and indicate a problem with the foundation.
Okay, so appraisal's covered. And I know it's weird. When you get an offer accepted, it just feels like, and you're the buyer, so many things are coming at you. Everything's moving fast. You need all these documents out. The appraisal's ordered. You're doing your inspections. Everything's crazy. And then boom, it's a hurry up and wait. And then you're just waiting. So what happens after the appraisal is in? The buyer has sent you all their documentation. What's happening behind the scenes as far as the lending?
Good question. So basically what happens is within the first day, I ask for a needs list of docs to go in for underwriting. We get those back. We submit to underwriting. My underwriter has 4 to 6 hours to get me my upfront approval, right? So I'm getting that upfront approval pretty darn fast. I order the appraisal probably that day or the next, and the appraisal will come in something like within 5 days. So our timeline for me and my team is I like to get all the conditions in before the appraisal is back.
Wow.
So we get our approval, we get our condition list, we go back to the borrowers, we say, hey, we have approval, congrats. These are the couple items that the underwriter wants to see before final review.
Like your insurance quote and things like that, right?
Yeah, insurance quote, maybe a letter of explanation on a couple things they saw in the credit report or bank statements. If there's transfers that need to take place or gifts that are happening, different intricate things that can happen on a file throughout will be conditions that the underwriter will ask for. Maybe they need a different P&L if the person is self-employed, or maybe we're missing a W-2 if the person has multiple W-2s and 1099s. Little things like that will be on our condition list. Most of it we get up front, but the underwriters do definitely a deeper dive and come back with a couple things needed. I like to get all of those back before the appraisal comes back in. And then we go all in for final once the appraisal is back in.
And that's final approval. So once you get your final approval, then what happens?
So final approval is in, we get what's called clear to close. And then my file goes to a funder, a closer. The funder will review the file. For movement mortgage, we table fund, which means we basically can fund the loan before docs. Before docs are even signed, really, but we don't need docs back in order to fund.
And those are your loan documents. So someone will actually go to a notary, or the traveling notary can come to them, and they're signing all their final loan documents.
Correct. But we have to balance with escrow before, because we need those numbers more solidified before we send docs. Mm-hmm. So my funder gets the file, she reviews everything, she sends escrow an estimate for us to balance our numbers. And once we're balanced, we then send loan docs to escrow.
And then also right before that is the CD, right? Can you explain that?
Oh, yes. So when our appraisal gets back, we can then order the CD, which is the closing disclosure. The closing disclosure will have more finalized numbers on it, but it is still just an estimate. We have 2 different types of closing disclosures. We have an initial closing disclosure and a final closing disclosure. So before they sign loan docs, normally for us at Movement, when the appraisal is back, that strikes us to send the closing disclosure. The closing disclosure goes out. You have to wait 3 days after the closing disclosure is acknowledged to actually sign loan docs. So there has to be a 3-day wait time.
And that's just to make sure. This was a consumer protection, this CD, to make sure that people actually had their real numbers, can review them, and aren't pressured at the signing table, signing their document, that they actually have the real numbers and they can sit with them and feel confident with them.
That's exactly right. That they take the time to really understand, to acknowledge what they're about to get into, and feel comfortable and confident moving forward and signing the loan docs. And then even still, though, the closing disclosure will be different on the loan docs because we'll balance with escrow and the numbers will shift, but they shouldn't shift too much, but they will shift a little.
Things like prorated property tax and all that, depending on the day of close and those types of things.
That's exactly right. Yes. And depending on other fees, if the condo fees weren't paid up front or they were, and things just end up balancing out. Lender's insurance with title will change a little, different things like that, as far as from the initial CD to the final CD. But it shouldn't be over $1,000 or so different.
And then once you have the clear to close, this is all again, hurry up and wait and then hurry up again. So tell me how that works with escrow and title for the money to get to, to where it needs to be.
Right. So we then send loan docs. Escrow will contact the buyer. How I like it, it doesn't happen all the time. We try. But when escrow contacts the buyer to schedule a signing with a notary, I'll send an email, or sometimes escrow just does it. They send the estimate for final funds that need to be sent to them. So they send an estimate and wire instructions. And it prompts the buyer at that time to send their final funds wire to escrow. Because of course, none of us can do anything, even if loan docs are signed, if the final funds aren't at escrow.
Right.
So then they get the estimate, they get the wire instructions, and they send their final funds to escrow. And the reason we call it an estimate, even in this very, very finalized timeline of escrow, is because you can't have a final estimate until after closing. Because numbers still shift, mortgage interest days, different taxes, things will still shift until the very day we close. So you can't have a final closing statement until after we've closed. So everything until the end is still an estimate.
Right.
Can be a little disconcerting because you're like, when is it going to be final? But honestly, it's never final until we actually close. Because what if we end up closing a day later? What if something happens?
Right.
Title,
And this happens all the time, actually. Something will happen that just delays things a day. Anything could happen. The traveling note, or someone could get in a car accident, not be able to get that appointment. Somebody could get sick, and then the escrow, there's so many different things can happen. So once we have funded and everything is all set in California, we actually don't close until the next day, where it's actually stamped and recorded at the city. And that's our close. And it's very anticlimactic because it's like, oh, here's an email. Congratulations, you've closed.
Yes, it's Los Angeles and some other counties. There are counties in California that do allow same day closing, same day recording, which means I can fund and escrow can close in the same day. Los Angeles, San Francisco, San Diego, the bigger cities, bigger counties, they don't allow same day funding.
And they used to, because some of our title reps would walk them in just so we could close that day. But I think they stopped allowing that, probably because we took advantage of it, I think.
I think they still can. It closed during COVID because they couldn't go into the actual recorder's office in person. So they stopped being able to do same day closing because of that. But I believe the option is available, I just think nobody sees each other anymore.
It's so true.
So few people do things in person that I should ask if title can still walk in
Yeah, that's a good question.
I know, can walk in a deed at this point, because you can go down to the actual city recorder's office and record in person.
Natalie, that's so informative. Thank you so much for joining us once again. Natalie from Movement Mortgage, you are the best. Natalie and I have worked together for almost a decade now, I think.
Oh, totally.
Yeah. Thank you so much for being on the show.
So welcome. It's always such a pleasure.
Here's a buyer's tip. When you see a house that you are considering putting an offer in, make sure you check what the school district is. Even if you don't have kids or you don't plan on having kids, it's important to know, as it can affect your resale value. Kenya, thank you so much for joining me on the show. I love having you here.
Happy to be here.
Okay, we need to talk about what's happening in the market. I'm feeling a shift. Justin, are you feeling a shift?
Definitely feeling a shift.
Okay, so we've been talking about this, that there's going to be a shift. We've been talking about this for 2 years.
Right.
I think it's finally happening.
What we had going on was not sustainable, right? So at some point, change has to come.
So what are you seeing, Kenya, out there with the peeps?
Sure. Now, it's funny because I'm going to talk to you from a lot of times I talk from like a buyer perspective, but I'm going to talk to you from a listing perspective because I have 7 active listings right now.
Wow.
Now, this is a beautiful thing. And I've been joking with my team. I said 6 months ago, I wouldn't have 7 active listings. I'd have 7 open escrows because they only would have been on the market for 2 days. Right. So what I'm seeing now is we are going, I call it the before times, before pandemic, before 2019. I remember I used to do a 30, 60, 90-day marketing calendar. That was how I did it, right? This is what I was going to do over a period of 90 days to sell this home.
Right.
I remember that part of my career. And then over the last 3 years, it turned into a 3, 6, 9 day marketing calendar.
Wow.
Where it was sort of like, put it on, offer deadline, open escrow. So now what I'm explaining to my sellers who are freaking out right now, they are freaking out because they are worried they missed the boat.
Mm-hmm.
It is taking more than 4 days for their home to sell. And that's not what they've been reading in the news for the past 2 years. It's not what their friends and neighbors have experienced. But now rates are higher and buyers are being a little more cautious and they're taking more time. So I think we're moving back to 30, 60 days on market.
I showed 6 homes this last weekend, and every one of the listing agents called me or texted me for feedback.
Yeah.
That would never have happened a few months ago.
Last year, you'd be like, I've sent you an offer that's $300,000 over ask. Can you please return my call? And they'd be like, no.
And
Never.
all of their voicemails would be full. You know what I mean? Because it's just like they're getting so many calls. That is, I've said this on previous podcasts over and over. When things shift in LA, they shift very quickly. It's not a gradual change. It has felt like an overnight change. People that have sold 3 months ago, I think, hit it. And now I think things are shifting.
Oh, look at that. Just got another text from a...
That's funny. Listen, what did your clients think about the property?
Yeah. Do you expect an offer? What do they think? Yeah, that's so funny. And then what about, Kenya, for buyers? Are you feeling that buyers are backing away? Are you feeling they're just being more conservative with what they're offering? How do you feel buyers are right now?
Well, I think that, it's funny because I did just get a multiple counter. which kind of made I did just get a multiple counter. And in my conversation with her this morning, she, she's okay to come up, but she's being pretty conservative.
Mm-hmm.
She's like, I'm looking at these reports and I'm seeing that there's going to be this much work. And, I also need to do these things. So I'm thinking this.
Mm.
And it's a very different conversation where last year we would have a multi-counter and I'd say, well, there are 28 other offers. Our offer is about $250,000 lower than, and, my clients would be like, well, give them my firstborn child. So now I'm having very conservative and slow conversations.
And I think I was talking to another good realtor friend of mine yesterday, and she was saying, what she's seen, and she does a lot of listings as well, was the properties that would have had 22 offers at the beginning of the year are now getting 3 or 4, 3 to 5.
Now, I don't know when this will air as opposed to the date right now, but I'd say it's also a weird moment because the comps are still really high. Right. But we feel this shift.
Yes.
But, the sales from a month or two ago were still kind of like, closer to the peak. So it's kind of an interesting time where it's like, well, it's worth this much on paper, but what is it worth in the market? Right.
Well, that's why some properties, it's so true. Some properties are overappraising right now. The lender will send their, they'll send their appraiser out and the appraiser will be higher than the purchase price. And it's a very good point, Justin, because when people go to sell, their agent will bring out 6 months of comp information. So in the last 6 months, these are similar properties that have sold for this amount. And, really important, I think, on pricing right now, pricing strategies as a listing agent, because if you are pricing what something 4 months ago sold at, you're going to have a hard time and it's not going to sell. So it's an interesting shift, and I think it's going to continue as rates continue to go up.
Most sellers, that's what they expect, right?
Yeah. So I think sellers are a little bit shocked right now. And unfortunately, you can't chase the market, right? You have to beat the market. So someone's on the fence right now about selling. I think they'll regret waiting 6 months to sell. I think prices are going to start to trend down. However, as a buyer, that also means interest rates will trend up. So a purchase price now in 6 months, if rates go way up, which I do think they're going to continue to go up, you might only be able to buy a house that's a couple $100,000 what you are looking at now. So
Right.
you really have to focus on your payment versus the purchase price and interest rates. What is your monthly payment?
What do they say? Marry the payment, date the rate, or something like that. Because the rate.
I love that.
Yeah, the rate is going to shift and change, and you can always refinance. And, at some point rates might not be 6, they might be 4, and then you can save money. But if it's a payment you can afford and you love the house, then do it.
I don't think waiting is ever a good strategy in buying real estate. Because the second you're in, you're paying down your mortgage. You're not just paying a monthly payment. A big chunk of that is going to take out the principal of your loan, especially the longer you're in the house. So I think as a buyer, I don't think it's great to wait out the market. Everyone who's done that in the last decade has regretted waiting. But as a seller, I do think if you're considering selling, this is the time to sell.
I know one guy who was waiting in 2006, and it was probably a good idea, and he bought right after the crash. But most people, it's really hard to time the market like that.
It's really hard. And even the people in 2006 when values were high, they're higher now. So, you don't lose money unless you sell at a really bad time, just like the stock market, just like anything else.
And what I'm telling my buyers is that I expect prices to maybe come down a little bit and rates to go up. I expect affordability to be the same.
That's the thing is, like our affordability here in the city, it's pretty rough.
It's pretty rough. And again, I think we say this, we drill this over and over and over and over. What type of house you buy is important. If you are buying a house that has a lot of potential that has not been fulfilled, you are going to have a much better investment. If you buy a house that is turnkey and perfect and at the peak potential, it is not as good of an investment as something that does need some work. Because, if we start going into more of a recession and inflation, you will probably be able to have more options on getting your renovations done a little bit more affordable than they are now. Prices will start to come down most likely. So you buy a house, or some of it you can do yourself. You can paint yourself. There are some things you can learn anything from a YouTube video. I fixed my dishwasher once.
Yeah, my dad told me that's where the real money is, is fixing the home yourself.
Absolutely.
That's a very Midwestern.
And over time.
Yeah.
Kenya, it is so great to hear your voice and talk with you. And you are just a wonderful person. I'm really grateful that you're my friend.
Well, always a pleasure, you too. And I'm grateful that you guys are my friends. And it's always really great to have strong realtors that you're friends with, because I know we call each other often to, what do you have?
Absolutely. Absolutely. I got something for you. Yeah.
Yes. Yeah.
And it's funny because it's not really competitive. Agents with agents, we all work together. We do deals together. And it's just so wonderful to be working with someone that is all about a win-win. And and you're just an amazing realtor, amazing mom. I know you do a ton. And I'm just inspired by you. So thank you, Kenya, for coming on.
Thank you for having me, you guys. And I'll see you soon.
You bet. Thank you, Kenya. Thank you for listening to the LA Real Estate Podcast. I'm your host, Sara Skelton. With me is Justin.webb from the Skelton Group.
Hi, Sara.
Hi. Thank you so much for joining us. Please get in touch with us if you have friends that need a realtor in LA. Actually, we help people all over North America, all over Canada, all over the US. We have a team of agents. If you need a good agent in your area, please reach out to us. All of our info is on the podcast notes. Thank you for listening.